Yeah, every time I do a video pre-market, it always seems to be the bottom of a trade or the top of a trade. Basically, everything reverses, and I jinxed it again. So I did a video as the dollar was hitting its absolute lows. I did mention it was possible, but it's just funny how it happened again. So yeah, today, big reversal. The metals just absolutely got brutalized, down almost 2%, I think. The markets, well, actually, the main takeaways for me are, first of all, the DXY, the dollar bounced from its absolute lows, 100.8. We're going to see all the charts, obviously. Um, and it went, it was pretty bullish engulfing candle. I still think there's a lot of resistance nearby, just above. So we'll check the charts. But the point is, the DXY bounced, and the metals, the miners just went down with the markets, right? That's one trend that we haven't seen in a while, which used to be the default trend. So market up, metals and miners up, market down, metals and miners down. But then since the banking crisis, especially, they seem to discorrelate. So, when the markets would go down, the metals and the miners would go up. But in this case, and this happened maybe the last 1 or 2 days, but especially today, really, yeah, metals markets down together. And what went up? Well, the DXY rates went up. The VIX didn't. The VIX is a useless fraud. I'm gonna actually delete it today because why relate to it? It's just giving you false signals. So the VIX will be deleted today on this video. It's done. But the point is, rates went up, dollar went up, metals, miners went down, markets went down. Um, Now there was if you zoom out, in the metals, there's a triple top. They rarely ever fail, which means I expect gold and silver to actually keep going. But at the same time, that's one hell of a steep move up. And today was probably the first day where I think a lot of people just got shaken out. And me, actually, I trimmed a little bit. I just want to be sure that no holdings are too heavy at the very top. So I'm ready to take a bit of a hit on the way down because I'm ready to switch to heavy bags on the way down. But I went to medium. There were one or two that were a bit too heavy. But something I did see also with the banks, so obviously the markets were down today, but the banks and the Russell again led the way down. And some of those charts look like they are ready for imminent breakdown, especially the KRE regional banks, small banks ETF. So lots of things to decipher today. Let's get straight into it. So we'll start off with the usual. Let's look at the markets, the S&P, indecisive, doji here. For me, the markets have no business being this far up. So, a move down is always justified in my eyes. But you got to respect the strength recently, especially breaking out of this descent and continuing despite the banking crisis, which a lot of people think is over. I do not. But yeah, S&P, for me, I think we're going to go down, any moment now. And I think we've lost a bit of momentum today. This is the S&P, the Nasdaq, similar, it didn't take out this resistance, but it was outperforming for a while. So let's just see when it takes out the next trend line. For me, the S&P, we're looking for a retest of 405.5. That's what I'm looking for. And then obviously a close below that. The Nasdaq closed below 312, this support zone. Obviously, it can go higher, and if it does, then a close above that. Same for S&P, looking for 418.4, let's say close. But I really am focused on the downside. For me, I think we're done with the upside move. Dow Jones looking for a close below 33,600, let's say, and then eventually, especially 33,300. So Dow's made a decent rally, but that used to be the weakest one just after the Russell. But the Russell, it doesn't surprise me, didn't take this out. That really doesn't surprise me. Very weak still, very weak. I mean, it should be trading all the way up here to equate to the others. But for me, very simply needs to close below 172.40. 50 would probably be enough. And I think that can happen very quickly. I'm talking Monday, Tuesday next week, because, and I always relate to the KRE, but I should start in this order. Now, look, the XLF, back to the banks now. This resistance, I think perfect, this trend line. All right, we had a nice close there on Thursday, yesterday, but So it suggested a higher move, which is what happened today. Markets were up at some point, but look at this. Perfect resistance, price support. You can see why, but anyway, Doji, yes, it was green by 1%. So that's more JP Morgan. I think we did have some earnings, and some of the big banks were up today, not too much. Well, actually, here they all are. Yeah, look, Citi, Bank of America. Look at this, JP Morgan, 7%. Bam. That's probably alone responsible for the XLF. But despite some of those big banks and those nice moves, and JP Morgan's been a massive winner from this banking crisis. So as usual, the big boys win. The regional banks, everyone takes their money out, and then just goes with the big boys that are guaranteed to be insured. So the usual suspects win, order out of chaos or profit out of chaos. So that explains the XLF, but still not even up 1%. KBE, the region, the medium banks, let's say, look at this. Just when you think they're finally going to break out the descending, and I covered this over during my pre-market video, despite the strength in all the other indices, the KBE and the KRE still hadn't closed outside of the descending. And it was the same thing for the KRE. Look, it still didn't close. Look at this, the opens above, yay, everything's great. Closes massive bearish engulfing. And for me, these two, especially the KRE, which is obviously more advanced on the downside, this takes 1 day. Go on, let's say 2 days, just to close below, what is it, 41.4. I prefer a close below 41. That really would do it. And then off we go to new all-time lows. I'm talking about bear market lows, but probably, look, we're going to probably go back down to 30 on the KRE, KBE, whatever, 28, doesn't even matter. But the point is lower. We're going to make new lows in the KBE if the KRE starts to close below 41. What do you think the Russell will be doing? The Russell will be making a close below 167. And then, 1 or 2 weeks later, we're doing new all-time lows, new all-time bear market lows in the Russell, which for me is pure recession, depression, whatever you want to call it, territory. And how will you have, I know these guys have been outperforming and shrugging off a lot of these, even the banking crisis, but I'm sorry, when you've got the Russell free falling, you can't have any green days. So for me, it's like a little bit of calm before an imminent storm. And the KRE shows everything. Look at this, down 2%, Russell down 1%. When the VIX is red, by the way. This makes absolutely no sense. It's lower than, you know what? I'm done, man. Honestly, just forget it. Just doesn't deserve to be on my watch list at all, no matter how many people follow it. So yeah, the point is I feel like the markets are going to go lower next week. I say that a lot, but I think it's really justified now. Plus the markets are pretty toppy. Let's check out rates. So rates, and actually pre-market, the 1 year was up strong, whereas all the other were red. But look at the difference now. The 2 year actually moved up more. But yeah, you can see a breakout in the 1 year. We have a close above prior resistance. I think that can be called resistance. So a very strong move there in the 1 year. And look how high we went. We tested 5%. That's huge. That's a huge move. If you have another move like that, you're testing the all-time high in 1 day. So rates are going back up. I think you had a few people saying that rates. Who was it? BlackRock CEO. God, I forgot his name. Larry, whatever. He thought that for 75 basis points will come hike. Maybe not in one go. Maybe he meant in 2 or 3 tranches of 25, but rates going up. I still think that we're going to have a 25 basis point rate hike. I think they want that 5% secured, but here it looks like the market seems to agree. So obviously we've had rates come down because bonds were bought because of the banking crisis, but rates are going back up. The 2 year, look at this. We closed above the descending. For me, this is very important. We've got a bit of a short-term momentum swing here, change of direction. So we found a base. I said it would take some time and, not the most obvious support zone, but I think this one pretty much clear. But what was more identifiable was this descending trend line. And I think this is a nice close. Even if you ignore this trend line, you got to close above the last sort of high attempts, the highest wicks. We're going to test 4.3. ish on the 2-year. 5 years, same thing, close above the descending. We're going to test, let's say, this range, 3.8. 10-year, more important, close above the descending. We're going to test 3.6. 30-year, above the descending. We're going to test 3.8, maybe higher. And then something else. I hadn't been checking all the other European, British, okay, the Japanese is an anomaly, but I wasn't checking their interest rates, but they were going generally before the same direction as the US rates. So I thought, all right, let's check it out. From this, you can see, okay, we also had a bit of a smash because of the banking crisis, but now we're going back up. And to be honest, it wouldn't surprise me if in 2 weeks or something like that, we'll be testing this old high, especially this thicker zone here. I forgot to make it more narrow, but you can see how rates are going back up. Okay, the DE is the same as the EU 10 years, it's the same thing. The French, straight back up to all-time highs, right? You can see that. Oh, there's a gap, whatever. We're going straight back up to 3.2-ish. The Italian got a little bit of a descending line to close beyond, but otherwise straight back up to 4.9. I think that's pretty clear trend in all of the European yields here. The British, that is outside the EU, and also was, smacked down. The yields were smacked down after the new election of the Prime Minister Sunak, who said he was going to sort everything out. And I told you it's crap, and it's crap. We're going to go straight back up 4%, then maybe onto 4.6 a few weeks later. The point is yields across the board are going back up. If I go back to the 10-year, you can see how, okay, US yields are more suppressed, but the trend is back up. Now, obviously, things can happen. You could have another bank failure, and then everyone starts to freak out and buy bonds, and therefore yields go down. But that's also priced in, and a lot of people have considered this scenario. And for me, gold will benefit from this once again, but that's a different altogether. But the point is, yields are going back up, and actually, the market seems to be going back down with yields as of today, at least. For me, that was pretty clear. So definitely worth knowing or taking note of. Let's check out the dollar. Dollar was probably the most important thing for me today was. So at the time, and I did mention that this was possible, I definitely considered it. We were testing 100.8. We were testing the absolute low. And then look what happened. You wouldn't, maybe if I go to the 50-minute chart, look at that. We were there. I did mention, and look at that. Was that on some news event? Was that retail sales or something else, or the ECB? I forgot. I don't care. Straight up, very strong move. Retests now what's support, what should have been resistance about that area, yeah. And now looks good. However, let's just go to the daily. What have we done? We've bounced off the absolute low. Totally makes sense. It's a very strong engulfing bullish candle. We should see some continuation, but we should also see some resistance nearby. So for me, 102, this descending should act as resistance. But then we're in an extremely tight wedge where it's got 2 or 3 days and something needs to happen. And if there is a breakout, I don't expect the biggest move to the upside, because a breakout makes sense. It just says, look, a break to the upside suggests, look, we've come down all the way back down to test a low. We're not ready to just go to new lows immediately. Let's just imagine, let's have a small breakout. Oh my God. Probably even fails to get above this horizontal, because I think it's pretty weak price action. And then, and it's not going to take this long, by the way. It'll probably all happen there. The point is, even if there's a breakout, for me, it's kind of done. The dollar doesn't need to, and obviously anything's possible, but because of the way it's failed to rally and break out before, and the fact that it's come all the way back down so quickly, it's just not ready for a breakout. It'd be kind of contradictory. So I think we're going to break down, but I definitely see the potential for a breakout first. But I really doubt if we break out, we even get to 103. So obviously we could just break down straight away. I don't see that happening. Plus, this is a pretty strong candle. There's a bit of continuation needed. So let's see. But we're very tight, and I think 1, 2, 3 trading days, and either we break out or we break down because this chart here, these patterns here, definitely ring true, I think. So that's the DXY, very important stuff. Really, really influential on the metals. Let's check commodities. So copper, and that makes sense with the dollar being strong, the metals being weak. You can see how at one point we were up pretty nice, 4.2, right? My target's 4.3 and then actually higher. But yeah, just back down again. Not the biggest red day. It's just suppressed the move up because of the dollar's move, which is okay because we're just retesting breakout. I just expect something like this. You know, depending on how strong the dollar is on the breakout. Yeah, expect that. Nice and simple. Natural gas just cannot make its mind up. It's just going up and down on the seabed here, dragging around 210. I mean, you know, it's spending too long down here. It's a bit like the DXY. You know, it's come all the way back down again. No strong bounce. This is what I expected the DXY to do, a small breakout, but nothing concrete and then break down. Honestly, I want this to go up because I'm in it. But if it goes down, I really don't mind. I've got a few more tranches to buy. And to be honest, when I see how long it's spending here and how it's incapable of getting above, you know, 2.3 and rallying, I just feel like it needs to go back down again to find a lot of strength because it just doesn't have the strength at the moment. So even though it's up 5%, it just needs to close above 2.3. So let's see what happens. I still reckon it will break down, but so far it's holding. Oil sideways, you know, despite the strong dollar, it was a green day. I mean, makes sense, I guess. It's just sideways. Any move down should be sort of bought down here. Any move below 79, I would be very surprised if that doesn't get bought up quickly because of this move here on the global coordinated supply cut. So for me, oil sideways up. I do expect 93. I've said that, so I'm going to stick with that. Uranium, you know, it needs to close above this to really go to the next level and prove that it's out of this bottom area. But today we had a bit of a drop, so that day we'll have to wait. It did have a nice move yesterday, so still not bearish, even short term. But let's see, you know, if you start to have a close below 1960, below this candle, you start to have a close around there, it's probably going to go low. And if it does, it's going to look really weak. So yeah, let's see. Otherwise, sideways, up, breakout, then we start to test this horizontal line and this descending line. Let's see. Uranium is very, very important, very interesting to me. If there's a breakdown, I would definitely prefer a breakdown, but it's still not decisive yet, the chart. So still watching that. Okay, gold and silver. Yeah, you can see gold held a bit of support that I just drew in there. It's an ascending line where I have to ignore a little dip here. And silver actually has a very similar trend line. Let's just zoom out 1 hour chart. But you know, when it's so steep, I don't like to draw ascending lines because they can be breached easily. And then you think, oh, okay, now we're going down, but it's just a big drop that's happened, and it doesn't necessarily mean we're going to go much lower. It's so easy to trigger that trend line. So, but I drew it anyway. Let's just look at the daily. Look how steep this is, you know. And intraday, I was seeing the dollar, and this is what I was saying pre-market. I thought, if things change, I want to be nimble, and I might just start trimming or selling. And today, I just didn't feel that confident about my positions, and I realized it was because I was a bit too heavy in some of my positions. And I should never feel like that. I should always feel robotic, have a plan, not care if something's going up or down. There's always a reason and a plan, and I should always have some sort of strategy going forward. So if it goes up, I know where I'm selling, how much I'm selling, how much the value of the stock should have, and if it goes back down, why I'm okay with it, where I buy back, where I stop buying if I think my thesis is wrong, whatever. And I'm in gold and silver stocks that for me long term makes sense, and nothing's going to change that unless they cut government spending enormously, probably take the troops home, go to a gold standard. These the types of things that you know are not going to happen. So I don't see that thesis changing. But I just thought that one or two of my stocks were a bit too heavy. Coeur d'Alene, for example, Fortuna, Discovery Silver. So I had to do some trimming on there, not much, but it was just what I bought a few days ago. So yeah, I did some of that. And then at the end of the day, I was thinking, well, actually we held. And honestly, I'm not sure what to expect because it can really go either way. Gold and silver have had a hell of a move. It just takes a few more days of closing below this ascending for me to think, okay, we need to go a little lower. It's a healthy pullback. But still, it's going to be a pretty big hit because after a crazy run like this, I'll get the GDX later, but you can expect a bit of a pullback, you know? But I still think we're going up and then breaking in 2100 gold and absolute record high silver to 30. So it depends how greedy I want to be in the short term. Do I want to trim a little bit to buy back even more later to then, compound my gains? I'm not sure. It depends on the dollar, it depends on the market. Those two components mainly, also interest rates. How are they going to move? What do I expect for the Fed to make as a decision on interest rates, and what will the effect be on the metals? So I've got this sort of short-term predicament where I just don't know if I should sell a bit more to buy back what I sell and more, or do I just hold what I have, and if it goes back down, just buy more? So anyway, that's up to me to decide. I'm not going to do it today. It's been a long day, and that's what Saturday and Sundays are for me. You can see what I think gold, it did actually hold this ascending generally, even though I think this ascending is maybe being too analytical, but if we do break it, I do see support around 2450 on silver. On gold, same sort of trend line. You can see we closed above it. If we go lower, then 1980, after that 1950, then 1930-ish. I'll leave those trend lines in place. But for me, what am I really trading? I'm trading the GDXs. Now look at this. The GDX and GDXJ did close decently off their lows, especially the GDX. Actually, that was quite good to see. That was a nice rally there. So, but still, if gold and silver start to take a bit of a drop, these will obviously go lower. GDX will obviously hit 33.5, maybe lower, which is a pretty decent move down. GDXJ, I'd expect that to start moving down to 40-ish. Who knows? It could go lower, but then I do expect a nice bounce and then a higher low overall. But you can see up here it's looking top, and remember the GDX has tagged its high here. So maybe the top is in. I just don't know. I'm looking at the charts, and ultimately, when you don't know, you respect the charts. You've got to look at the DXY, and you've got to judge how much value you have in your stocks. And if you're nervous, like I was today at one point, not nervous, but thinking, I don't feel fine. I was looking at my screen a bit too much, and I knew that there was a problem, and I just had too much in one or two stocks. Because normally, whether it's going down or whether it's going up, I'm happy because I got a plan and I'm looking forward to a higher move or a lower move because I'm waiting to buy more or sell more. So it's just some adjustments I had to make there. Uh Finally, Bitcoin. I'm not going to spend long on Bitcoin. I spent a bit too long on it recently. Bitcoin was unchanged. It wasn't that bad. It gave back some. It was higher at some point. Ethereum had a much better day. Look at that strength. So Ethereum's outperforming. I'm wondering whether alt season is on. But the miners actually gave back quite a bit of their pre-market gains, including my Hive stock. Where are the miners? Here they are. But, not the worst day. They're basically unchanged. But, they were up decently pre-market. Mara, right? I think the miners have done better than the coins, actually. So I feel quite lucky being in Hive. Where's my Hive? That was up 1%. But again, pre-market was actually testing where I wanted to sell, but I didn't have a sell-in for pre-market. It was just good till cancel during regular hours, so I didn't get to sell that. That was a rookie move. I should have known better. I could have trimmed it 428. I think it would have got there. But anyway, crypto is interesting. But also pretty much following a bit the markets and reacting to the dollar a bit like gold, actually. So that's also interesting. Anyway, I'll end the video there. I don't want to be too long, and I'll do another one during the weekend when I'm a bit more awake, but I hope that was of value.